What if I told you that America's energy security just suffered a massive blow? Canada, the United States' biggest oil supplier, has made a shocking move, shutting down a staggering $103.3 billion worth of oil exports to the US. This decision isn't just about trade. It's a seismic shift in global energy politics that could send gas prices soaring, industries crumbling, and the US scrambling for new suppliers. But why is Canada taking such a bold step? And what does this mean for the future of America's energy dominance? Stay with me, because what you're about to hear changes everything. Long-standing energy partnership in crisis. For decades, Canada has been the United States' most reliable energy partner, supplying the majority of its imported oil, natural gas, and even electricity. This arrangement benefited both nations. Canada found a steady buyer for its vast energy resources, while the US enjoyed a secure and relatively cheap energy supply. But tensions have been rising in recent years. Trade disputes, environmental regulations, and pipeline restrictions have strained relations between the two countries, and now Canada has had enough. The final blow came when US policies made it increasingly difficult for Canadian oil to flow south. Pipeline projects were blocked or delayed, environmental regulations became stricter, and tariffs on Canadian goods created economic pressure. In response, Canada started exploring alternatives, other buyers, new markets, and strategies that would lessen its dependence on the US. And now, that shift has finally happened. Canada is walking away from the US oil market, and Washington is suddenly realizing just how much it relied on its northern neighbor. What led to this game-changing decision? This wasn't a decision Canada made overnight. The warning signs have been there for years, but US leaders failed to take them seriously. One of the biggest reasons behind Canada's shift is the increasing difficulty of selling oil to the US. The cancellation of major pipeline projects, such as the Keystone XL pipeline, left Canada with limited infrastructure to move its oil south. Environmental policies in the US discouraged further investments in fossil fuels, pushing Canada to seek new customers elsewhere. On top of that, the US has been focusing more on its own domestic oil production. With fracking technology allowing the US to extract more oil from its own reserves, Canadian oil started to look less essential. But Washington underestimated just how vital Canadian energy was to the overall stability of the US economy. The reality is that while the US does produce a lot of oil, it still heavily depends on imports, especially from Canada, to meet demand. Then came the trade wars and economic policies that strained relations even further. Tariffs on Canadian goods, including steel and aluminum, sparked retaliation from Canada. The US assumed that Canada had no choice but to continue selling energy at low prices. But Canada had other plans. Instead of accepting unfair trade conditions, Canada aggressively sought new markets, expanding its energy trade with Europe and Asia and making deals that would allow it to bypass the US entirely. Rise of new trade partners. With its exit from the US market, Canada has wasted no time finding new buyers. Asia, in particular, has emerged as a top destination for Canadian oil and natural gas. Countries like China, India, and Japan are eager for stable energy sources, and Canada is stepping up to meet the demand. One of the biggest moves in this strategy is the LNG Canada project, a massive liquefied natural gas facility on the west coast that allows Canada to export energy directly to Asian markets. This project alone is set to reshape global energy trade, making it easier for Canada to send its oil and gas to high-demand regions without relying on US pipelines. Meanwhile, Europe is also turning to Canada as a key energy supplier. With the ongoing energy crisis sparked by the war in Ukraine and restrictions on Russian oil, European countries are desperately looking for new reliable sources. Canada is stepping in with long-term trade agreements, ensuring that its energy resources flow across the Atlantic instead of south to the US. The Trans Mountain Pipeline expansion, once intended to supply American refineries, is now shifting its focus to global exports, further reducing Canada's dependence on the US. What this means for the United States. For the US, this shift could be devastating. Losing access to Canadian oil means turning to more expensive and less reliable alternatives. The US will now have to import more oil from OPEC nations, Venezuela, and the Middle East, regions known for price instability, political uncertainty, and frequent supply disruptions. This means American consumers and businesses will face an unpredictable energy market where prices could skyrocket overnight due to geopolitical tensions, conflicts, or sudden production cuts by oil-producing nations. Unlike Canada, which has been a stable and predictable supplier, these alternative sources come with risks that could leave the US vulnerable to major energy shortages. The impact won't stop at the gas pump. The US also relies heavily on Canadian hydroelectric power to keep electricity costs down, particularly in states like New York, Michigan, and California. These regions depend on steady imports of clean, affordable electricity from Canada to power homes, businesses, and industrial facilities. With Canada redirecting its energy exports to other global markets, electricity prices in these states are set to surge. Homeowners could see their monthly energy bills climb to unprecedented levels, while businesses, especially those in energy-intensive sectors like manufacturing, data centers, and retail, may struggle to stay profitable. Worse yet, the risk of rolling blackouts and grid instability will increase, as alternative energy sources won't be able to fill the void left by Canada's withdrawal. Industries that rely on cheap and steady energy supplies, such as manufacturing, transportation, and agriculture, will also bear the brunt of this crisis. Higher fuel and electricity costs will force companies to increase the price of goods and services, contributing to inflation. Factories may be forced to slow down production or shut down entirely, leading to mass layoffs and economic downturns in regions that rely on manufacturing jobs. Farmers who depend on fuel for tractors, irrigation systems, and transportation will face rising operational costs, which could lead to higher food prices for American consumers. In short, this energy shift won't just affect gas prices, it will send shockwaves through the entire economy, making everything from groceries to airline tickets significantly more expensive. Can the US fix this, or is it too late? Now that Canada has moved on, can the US repair the damage and restore its energy partnership? Some experts argue that Washington needs to act fast, lifting trade barriers, re-establishing pipeline projects, and improving relations with Canada before the situation becomes irreversible. But others believe that the US has already lost its grip on Canadian energy and that the shift towards Asia and Europe is permanent. If the US wants to regain access to Canadian oil, it will need to make major concessions. This could mean easing environmental restrictions on pipelines, removing tariffs on Canadian goods, or offering better trade terms. But even if the US makes these moves, there's no guarantee that Canada will come back. With higher prices, better deals, and more stability in its new partnerships, Canada may have no reason to return to a US-centered energy trade. The bottom line? The US took Canada's energy for granted, and now it's paying the price. Canada's decision to cut off $103.3 billion in oil exports to the US is more than just a trade shift, it's a wake-up call. The global energy market is changing, and the US may no longer be the dominant player it once was. With rising fuel costs, potential blackouts, and industries under pressure, America is now facing an energy crisis of its own making. So, what do you think? Can the US repair its relationship with Canada, or is it too late? Let me know your thoughts in the comments. And before you go, don't forget to subscribe for more updates on global events that could change everything. Thanks for watching, and see you in the next one.